Institutional capital has been flowing into professional sports over the last few years, and no one has dominated this space more than Arctos Sports Partners. Arctos is a private equity firm based out of Dallas, Texas. They were founded in 2019, and they ended last year with over $4 billion in their first investment fund. Sportico reports that they now have 25 investments in 18 different sports organizations. That includes Fenway Sports Group, the parent company of the Boston Red Sox, the Pittsburgh Penguins, and Liverpool FC. They have investments in the Golden State Warriors, the Sacramento Kings, the Tampa Bay Lightning, the Minnesota Wild, Real Salt Lake, and many others. The strategy at Arctos is actually pretty simple. They go out and raise billions of dollars in institutional capital from investors and buy minority stakes in professional sports organizations with the one goal of achieving growth. And as I've talked about many times before, this strategy has worked out extremely well over the past 2 decades. For example, from 2002 to 2021, the S&P 500 saw a price return of 458%. And while that's a nice return, it hasn't matched the price return of every American sports league. The NBA is up over 1,000%. MLB is up nearly 700%. NFL is up 558%. And even the NHL is up nearly 500% themselves. So Arctos Sports Partners is now doubling down on this strategy. And Sportico is reporting that they've raised a second fund with more than $1.1 billion of assets already. But the reality is that this is probably just the beginning. These professional sports organizations are now accepting institutional capital because the team valuations are getting so high, and it brings in an entirely new investor base. And institutional investors are interested in these teams for the same reasons they always have been. They're diversified investments with a strong record of price appreciation, and they don't expect that to stop anytime soon.